And check out the move on Snap, plunging after revenue and guidance fell short of expectations. Social media platform also facing some competition in the ad space. And that's where we'll begin with our next guest, who does cover both names, Rob Sanderson, Loop Capital Markets, senior internet analyst for the U.S. and China. Rob, it's great to see you. You make the point that you were looking for greater momentum in the recovery and that there was sort of a budding enthusiasm for a recovery, yes?
Oh, yeah. The Snap quarter was, just basically in line with consensus, mostly in line outlook, but a very big expectations miss. The stock re-rated pretty meaningfully during the quarter, up about 90% since reporting its third quarter results. Very strong market, of course, with the S&P up 20%. They had big platform changes early in the year. It was very disruptive to large advertisers. It's just taking a while for that to ramp back up, but I would encourage you to remember, this is essentially the same medicine that Meta took a year earlier. And revenue declined for Meta for 3 straight quarters before ramping up slowly, and now obviously has taken off since. So that's what Snap's hoping for in their future, but definitely a disappointment along the way here on Q4.
Yeah, the skeptics, though, Rob, do point to, compared to Meta, a much lower index to small and medium businesses. How much does user growth get you if you don't have those eyeballs?
Meta's the best in the business for sure in the long tail. Nothing compares with the reach and the ability for Meta to drive real business outcomes for small businesses. It's the envy of the industry in that regard. There's still a lot of headroom for other companies, and Snap included, in the large advertising space. I don't think it's mission critical to get into that long tail. They still have a long way to go in larger and mid-sized advertisers. Their ARPU is a small fraction of Meta, which leads the industry by a long way.
Is that why they seemingly are more susceptible to some of the cyclical issues like geopolitics and like what's happening in the macroeconomy than some of their competitors?
Yeah. One of the reasons that long tail provides resilience, it's a counterbalance to some of the things that are happening in the broader economy. But there's a number of other issues. I think that they have high exposure to kind of entertainment and fashion-related categories and things that are, of course, they skew to a younger audience, a lot of Gen Z, and that's an area that I think is just inherently more volatile in advertising spend than the resilience and the diversity of some of the larger platforms.
Rob, when you talk about sort of that year of efficiency that began last November with Meta, and then these guys finally kind of getting in on that, what took them so long? I mean, why would they have moved more quickly? Meta is far larger, growing far faster, and yet also still trades at a lower multiple, I think, to free cash flow.
Yeah, the restructuring wasn't the change. It's the change in the ad tech platform, and they had greater exposure to the changes at Apple with the app tracking transparency issues, switches rather. And they delayed their platform implementation until after they got through the holidays. Meta took the medicine right up front, and that was so it's a little bit of a delayed response at Snap. I don't think it was that they took them so long. It's that they waited to get the holiday season through and then implemented changes after. And now they're just wrestling through the after effects of that.